Hello, everyone, and welcome to Real Talk Office Hours, hunting for silver linings for this Monday, June 8th, 2020. Hosted today by Corey Hart and George Katsanos, and we have a very special guest. We have Celestine from just outside Nairobi, Kenya, and her Startup Grind chapter. Brought to you by Startup Grind, the world's largest startup community. With 600 plus chapters in over 125 countries, Startup Grind operates with a mission to educate, inspire, and connect. And we're driven by three values: make friends, not contacts, help others before you help yourself, and give before you take. Now, the pandemic has been and will continue to be the great global leveler. And as entrepreneurs, we do our very best for our businesses, our teams, our families, and we need to be informed, rational, analytical, and rigorous in our thinking. We should also learn to control our biases as they emerge in various circumstances. And we invite you to join us live every Monday, Wednesday, Friday at 1 p.m. Eastern Standard Time as we track the intersection of facts, biases, and action through our review of global financial markets. We do this alongside check-ins and real talk with Startup Grind chapter directors, entrepreneurs, and ecosystem stakeholders from across the world. Now, no one has a crystal ball, but if we keep our eyes and ears open and we pay attention, we may be able to see around the bend and with some luck, spot the silver linings that are around every cloud. If you miss the live events, you can review the recordings at startupgrind.com/grand-rapids, where you can also download the reading notes from the show. Now, before I introduce George for our global financial market update, just a little bit of housekeeping. Comments made and views expressed by all participants in this podcast are not intended to invite or incite individuals, entrepreneurs, or investors to buy or sell financial assets, real assets, commodities, futures, and or options. The purpose of this podcast is to educate and to inform, not to trade or to invest. If you feel compelled to trade and to invest, please call your broker. Now, remember, risk is everywhere, even when you think that you're not taking a risk. Now, with that, it is my absolute pleasure to introduce George Katsanos to get us started with a catch-up of what the global markets are thinking. And George, go ahead and take it away.
Good afternoon, everyone. Welcome to Startup Grind Grand Rapids Real Talk, hunting for the silver lining. In case you haven't noticed, the markets are rallying again. Although today's online visitor is joining us from Kenya, and you can see here the map, I would like to start by focusing a little bit on our side of the world, essentially the financial markets, starting with the currencies. The euro has flirted at 113 against the dollar. Clearly, the risk trade is on. And as we will see when we go through our notes, you will realize that the markets have actually come to understand that we have moved from essentially rescue to recovery. What that means is that the world economy has accepted the fact that we've changed a chapter. The foreign exchange market has taken cue from the policymakers, and we've seen that every currency has started to rally to benefit from capital flows. The yen is the only currency that has strengthened a little bit, but across the board, you see that most currencies have benefited against the dollar. When we look at the fixed income markets, you will see that not much has changed. The Bank of Japan policy of anchoring the 10-year yield at 0% remains intact. Australia is unchanged, New Zealand relatively unchanged, Hong Kong comfortably sitting at 0.5% for the 10 years, and goes on. And India, of course, under 6%, despite the action by the credit rating agencies. When we look at Europe, on the other hand, we see that Europe is outperforming. The 10-year government bond yields have been collapsing. Greece, under 1.4%, Italy at 1.4%, France at 0%, the UK at 0.33%, and so on and so forth. So what the 10-year bond market in Europe is saying that the policy actions by the European Central Bank have been conducive to providing a stable environment for the policy actions to be implemented. Christine Lagarde today spoke online to the European Parliament and urged the European Parliament to pass more legislation providing for fiscal support. What ECB President Lagarde also mentioned was that the additional 600 billion euros worth of capital allocated to purchasing of liquid assets was required. So the benign environment in the US is followed by benign environment in Europe, by benign environment in China, by benign environment in Japan. For the first time, we read over the weekend that the Chinese central bank is considering issuing $1.3 trillion worth of debt. We will come to this in a moment, but let's finish by looking at the Americans, the 10-year bond yields. The US, from having been close to 1%, now is hovering below 0.9%. Canada is at 0.7%, and Mexico just over 6%, 6.25%. The government bond yields are telling us, in North America, are telling us that investors are not so much concerned about the fixed income environment. They're not looking for protection, not as much as they were looking at 3 weeks ago, a month ago, a month and a half ago. Risk assets are on. Investors, entrepreneurs are gearing themselves to a full recovery in the second half of this year. The commodities market is telling us a similar story. Having been close to $40 a barrel, the West Texas Intermediate is trading at about $38 and change. Brent is at $41 equivalent, and natural gas under $1.8 per thousand BTUs. Gold has just crossed 1700. The reason we have this sudden movement is because inflationary pressures seem to be appearing. The investors in gold are expecting that all this money that is being printed, sloshing around, is going to have inflationary pressures. And as we have noted in the past, the gold has been a safe haven for two types of investors: those who are afraid of a collapse in the financial markets and those who expect inflationary pressures. Copper, what a wonderful rally. Copper has been on the go for quite some time. And as you can see from our full map here, I mentioned some time ago that copper is a substitute for economic growth, for manufacturing growth. We saw that on the 6th of August last year, the copper was trading at about $257 per ounce. Well, here we are, just under 257. Does this mean that all is good? Well, not necessarily. It doesn't mean that everything is fine and hunky-dory. It does mean that we have to be very careful about the way the world economy is trying to find a balance. Remember also, please, that the markets, all financial markets, are a discounting mechanism of future expectations. When we look at agriculture, we see that corn and wheat have been, again, following the same pattern of agricultural commodities. Here in the Northern Hemisphere, we have plenty of supply. The crops seem to do well, and therefore, unless there is a major change in Chinese purchasing from US agricultural suppliers, the prices are going to remain subdued. Live cattle is trading $96 per pound. When we look at the stock market, however, what we're getting is a completely different picture. And the picture is essentially a picture of optimism. At this level here, all these green items that you see are mostly African, Middle Eastern, and Asian countries' stock exchanges that have closed. Across the board, you see anywhere from a low of 0.76 in the Pakistan Stock Exchange Composite Index, all the way to 2% 2.9% in New Zealand. Even Shanghai was up. Hong Kong just broke even today. But for the most part, the sentiment in Asia has been very positive. I don't know if you picked up on the news, but New Zealand has almost succeeded in eradicating the virus. In Europe, on the other hand, some minor profit taking was visible today, and the reason is because obviously there were more sellers than buyers. I think Europe was looking for a rest. Europe is also testing previous highs. Here in the US, however, our markets are rallying. The bulls have completely taken over, and we are now beginning for new highs. As we're preparing for our next level of analysis and having Celestine take over the microphone, let me summarize a couple of points worth noting. Today's notes on Real Talk are going to be substantial. We have moved from a balanced, meaning everybody going south, everybody going down, everybody suffering kind of environment in the financial markets, to an environment where exuberance has taken over. Underneath all this is a discrepancy, however. This discrepancy is the outcome of monetary and fiscal stimuli from both the fiscal authorities and the central banks around the world, and the fact that we have to be cautious. The shock that we all experienced in the last 3 months, 4 months, 6 months in the case of Asian countries is not going to go away immediately. At the same time, the fiscal and monetary stimuli are creating economics hazards, are creating political and policy hazards. As Bill Dudley, the former governor of the New York Fed, wrote in an opinion this last few days, the Federal Reserve has to be very careful about whom they support and how they support. In fact, in an interview this morning, Ben Bernanke, the former chairman of the Federal Reserve Board of the United States, cautions about precisely this aspect of policy. He cautions that markets should make decisions about who survives and how we survive this change in the structure of the economy. Last but not least, Italy. And I want to focus for a moment here because an Italian economist put it very correctly. There is some moral hazard involved in all this, and I don't blame the frugal nations of Europe for wanting to be vigilant. Rosa Maria Bitetti, an economist and lecturer at Louis University in Rome, said, there is a feeling that a kind of Romanization of European fiscal policy is taking place. What that means, Bitetti says, is that Italy and other weaker Euro members risk misspending the time and money and put off hard decisions to enact growth-friendly measures. The links for all these articles will be available to you, but remember this cautionary tale from Italy. We will likely see this around the world. This low-cost, so to speak, rescue policy has long-term effects for entrepreneurs and investors in our ecosystem, in startups, in communities that are looking to support innovation, knowledge-based solutions to problems. This is a very important note of caution. Please measure twice before you cut. Back to you, Corey.
That's always great advice, right? And that quote and the news out of Italy is very interesting, since we just recently spoke with a chapter grind director in Tuscany who's speaking about a feeling of optimism and in his region and among his ecosystem. So looking forward to checking in with him and seeing how things are panning out there. But now it's time to switch gears and speak with our guest. We have Celestine. She's in a chapter director from a small city just outside of Nairobi in Kenya. So Celestine, hi, hello, welcome to the show. So glad to have you.
Thank you very much. I'm glad to be here and looking forward to interacting at least with your community and learning more.
Yeah, absolutely. And this has been just a really wild ride for George and myself, being able to travel so far in so little time around the planet and just really get a temperature of what's happening in ecosystems around the world. So could you, but you personally also have a really great and interesting background. I'd love to hear what it is that you're involved in as far as ecosystem building, some of the organizations that you use to do that alongside Startup Grind, and then your personal entrepreneurship background. I know it's kind of a lot, but I'm excited to hear about it.
Okay, so I'm a chapter director, Startup Grind, KAJIADO. KAJIADO is just a very a small town right out of Nairobi, located on the national park. The Nairobi National Park is divided into two. Part of it is in Nairobi and part of it is in Kajiado. So it's just like 7 kilometers out of Nairobi. And my community consists of farmers who indulge in agri-tech and hospitality entrepreneurs who mostly use Airbnb platforms or booking.com to kind of like get online and be discovered. I've been involved in a lot of ecosystems here in Kenya. Some of my partners that I've worked with are probably the Google business groups, which is Women Will in particular. So I'm a Women Will lead for Nairobi. And I'm also involved with the Edtech, in the Edtech space. My startup is actually in the Edtech space. So just the right kind of entrepreneur that is being looked for in this space because education, as we know, it has gone online. So a lot of institutions and a lot of programs are also going online. And so we are currently like very busy discovering, researching, and also looking for collaborators and partners to see what products or what services we can push online. Because as you have seen, the future has gone digital very drastically, and it will not be the same again. I don't think things will become normal, the normal that we knew. The new normal is digital.
Yeah, absolutely. Now, I do want to ask you specifically about EdTech because it's in the news here at least, and then in Europe where all the education that has been forced to go online is getting a failing grade. Like the pivot wasn't as successful or as easy as people thought it might be. Can you speak to that and maybe the larger opportunity there?
We have the same problem also here in Kenya. And when you're talking about that, and we look upon you to kind of like set standards for us, it's kind of like worrying. When COVID happened, what happened was that most of the institutions were closed. So everybody was forced suddenly to go online, which is digital. Some of the schools were prepared, or some of the institutions were prepared, but the large number were really not prepared. Private institutions set a pace ahead because most of their educators were already trained on going digital. But the larger community, which is the national and public institutions, were not prepared at all on going online. So they've kind of like adapted by using television and radio, but still it's not working as we projected that it would work. So we have gone back to the drawing board and realized that for digital or online learning to work, LMSs have to be adopted. And these LMS also have to take into consideration some of the struggles that most institutions face here in Africa, which would include electricity in terms of connectivity and also data connectivity that is also very low, especially when it comes to bandwidth. So coverage is not fully like 100% everywhere. And we are kind of like lagging behind when it comes to education. Most of the institutions have kind of like accepted this year is going to be like a no year of learning because we are still adapting, still piloting, still pivoting in some areas. Some platforms work, some don't. Zoom was a platform that was very well adapted until the Zoom bombing started, and it's kind of like been seen as not the best platform, especially when you have children, because of the hackers who are kind of like sharing obscene information or obscene content on the platform. So we're still learning, we're still adopting. We've realized like for Edtech to work, it has to be a collective effort of the service providers giving affordable data connectivity, and also platforms that also take into consideration that can work offline and online, which is still a new process or a new place of learning how to pivot in that direction. So we're all learning, but I can at least guarantee that I'm very, very busy in terms of taking existing programs online and also looking at platforms that work best for going online, and also the duration. So what most people haven't really understood is when you're learning online, what should be the maximum amount of hours that someone can learn online and concentrate, and there is impact in the information that's been shared. So we all learning in that process, knowing that there's a very short attention span online. Even if you say that we have like 3 subjects that are 30 minutes each, measuring whether learning has happened or even knowledge has been assimilated is also another process that we are all learning to kind of like adapt.
Yeah, there's some really interesting opportunities there for actually tracking and seeing what people are doing. Some accountability is possible, and then and these aren't new models, but like that self-directed learning types, of modalities, really harnessing the individual's curiosities, right? Now that they can be digital and online, but of course, as you mentioned, there's that large barrier of infrastructure. Now, that's related to something that we like to talk about with our directors from around the world. Is there an existing or an emerging partnership with policymakers, to help provide that level of infrastructure that's necessary for entrepreneurship, for connectivity?
Currently in Kenya, I think the government has suddenly realized that for even businesses or startups to exist, they have to meet them halfway in terms of providing probably some grants that will enable startups or businesses to first go online, and number 2, to be able to track their sales or their scale or growth from that online perspective. So the government, which includes policymakers, have seen the need of actually investing in infrastructure that enables startups to thrive at this point in time. Another aspect that the policymakers have seen is that if they don't support the entrepreneurs or the startups, there's definitely the revenue from the tax collected goes down, because COVID has enabled us to understand that it's been a huge game changer. Mostly, most businesses, especially in Kenya, are small, medium businesses. So most of the tax was being collected from a daily basis. And these businesses, because of them closing down, it's warranted that a tax has not been collected. The government does not know the next step of how it's going to run. So they are going big, especially on the adoption of the digital space, also looking at how they can tax people who trade online in the digital space. So that's the current conversation that we've just been having this week, where the government is looking at how do they collect revenue from online traders, and they're capping it at I think at a 1.5% for anybody who trades on an online platform, which is a bill that people are debating on and validating why they should ease off for the time being, just to see how it works before they decide to implement that bill. So there's a lot of change that's being adopted. And we have realized that if we don't adopt to, even as businesses, as startups, to the change that the digital divide is bringing in, or the digital space that has been enforced upon us, you either become obsolete in terms of your business dies a natural death instantly, or you have to kind of like pivot in something totally very different that involves also a digital platform or a digital element of some sort.
Right. And that leads us to what we often talk about is maybe you could give us a couple examples of entrepreneurs and people or companies in your ecosystem or region that have responded really well to this pandemic and are surviving.
Okay, so on top of my head, I'll look at an agricultural company called Twiga, which is one of the startups that's very well known here in Kenya, Nairobi. They've gotten some a good amount of funding from the last series that they were funded. They have decided to kind of like, their business model was basically to connect the farmer to the market. So they were supplying the small, medium traders with products straight from the farmer and enabling the farmer to be able to get a market. Because these small, medium traders premises were closed, there was a gap on how they're going to kind of like be able to supply these products. What they've done is that they've partnered with Jumia, which is an e-commerce platform that's known across Africa, and they have partnered also with the logistics, the logistics part of Jumia, to be able to connect the end consumer to be ordering their products straight from the Jumia platform, which is a great innovation. But we now wonder what will happen to the small, medium trader once the consumer is going directly onto the platform. Another example that I can give you is the businesses that used to deal probably in food, the restaurants. What they've done is that they've already started leveraging like Uber Eats to be able to showcase probably wholesome traditional meals or localized meals at a very reasonable price. And what they are promoting is you have to probably order. They have a cap. If it's 100 meals they're producing a day, they have to be ordered a day before, because the price is very reasonable, and at the same time the meals are limited. They've seen, at least they are keeping afloat at the moment by producing that. And then also a third example that would come probably straight from my head is dairy or meat producers, processed meat producers like sausages. They have decided to engage small, medium businesses that are probably woman-led to start supplying their products straight to the consumer at a subsidized rate. This way, the women would be able to earn a little bit of money while doing that. And at the same time, their products are also moving because most of the shops were closed. So slowly, as people are realizing that for them to stay afloat in this time, it's not a matter of just thinking very rigid that this was the business that I was in. As long as you've got a database of clients, you start offering what is available and what people are looking for most at this time. And what people are looking for is affordable food that has been at least certified that it's coming from a good source. So we have seen that many businesses have thought out of the box and have started at least embracing digital to be able to stay afloat and also to retain their staff.
Awesome. Thank you for those examples. And it's interesting as we do travel around the globe how there are some similarities and then some really stark differences based on the needs of communities. We also like to ask about the opportunities for investment. do the entrepreneurs in your ecosystem have access to capital when they need it? And at what levels do you see like maybe some maturity in investment, or where is there a need?
Right now, capital, even capital has become very limited because the first priority is anything health related in terms of COVID related products. But when you look at it from a wider margin, there's been more opportunities that have been opened, and that would come probably with processed foods. We realize that most of the processed foods that we had in the country were imported or coming from the neighboring countries, or because sometimes maybe it was cheaper to get a product, even if it's something as essential as medication from India or China. When the government closed the airspace, it became very difficult even to get some of the supplies of things that were really much needed. Something as simple as masks. So what people have become, they've become very creative in probably creating masks that are made from cloth, and reviving probably the cottage industries that had died because of competition of products being produced cheaper in China. So the startup community, they have kind of like sat down and also looked at the length of time that it takes to order a product from Asia, or from Asia would be like 3 weeks or 4 weeks. So within the 3 or 4 weeks, they've kind of like challenged themselves to create the same products within the country, where even if the price could be a little bit higher in terms of creation, they are looking at it also from a point of view of the community creating employment. So there is a huge element in terms of giving back to the community. Am I supporting my community for them to be able to exist? So business models have changed from profit first, or the hot cake. This is what's hot at the moment, for it to move faster to what is the community gaining from me actually purchasing the product that has been created within the community. And also what I've realized is that partnerships, people are talking more about partnerships more. They've realized that you cannot think that you're in competition with somebody who you're in the same space. All you can do is look at how you can complement each other in terms of providing products or services at scale.
That's I'm really excited to hear you talk about stuff like this, because it's the first time that we've spoken to anybody that's bringing up the idea of focusing on the value chain versus the supply chain kind of thing, benefiting the community by producing within the community. And surely that's happening everywhere, but you're the first to like really shed light on that. One last thing I want to ask you about before I let George at you, and you mentioned up a couple different times in a couple different ways what I think about as equity. So equity for jobs, equity for like opportunity, and then also, since you are so closely tied with helping female entrepreneurs, like there's, and you mentioned specifically women-owned businesses that were encouraged and started. So is this an opportunity? Do we think positively on maybe a better balance moving forward on gender equity, or is it still just too risky and we're really afraid of who's going to grab that equity, if that makes sense?
I think women also right now have to step up and prove themselves, because even like women in Africa, naturally we shy away from taking huge risks and being involved in big decisions, because we are probably the homemakers. And when I'm also studying, probably when it comes to businesses or even online opportunities, like in terms of gigs, work or products or services, it looks like men businesses are doing much better than the women. But that also, when you look at it from a cultural context, is because the women have more on their plate at the moment. They have to take care of the family first, take care of the children, the husband, and then themselves last. So naturally, even if they're in different ventures, their ventures come last. And because there is probably a schedule or a structure in a home where the breakfast, the lunch, the dinner, who looks after it? It naturally goes to the woman. The man is able to do more or devote more time onto their ventures or their businesses. But slowly, because most women are kind of like understanding that there has to be a balance, they are kind of like taking the bull by the horns and allocating some time at least for their self-growth. So I believe that this pandemic has enabled women to understand that for them to even move forward, they have to put aside time for themselves, for someone to see the worth of investing in them. So if they can prove that I put in this much time and this is what I could get out of it, naturally you'll be supported. There's a lot of programs currently that are being targeted for women, especially when it comes to agriculture and value add. And women are being encouraged to kind of like prove and validate that this is the model that I've been using and this is why I deserve also to be supported. So yes, there are funds out there for women, but it's up to the women to kind of like come with the numbers and the data and the statistics to validate why they should be supported. Because a bank like Stanbic had some fund from the IFC, which was about, I think, $20 million or $20 billion, but up to now, only 3% of that has been taken up by the women. That means that women who have applied probably have not validated why they should be given those funds, or the women have not even applied yet. So they are being encouraged to be proactive, to access these funds that are specifically have been put for them to access at this time.
That's some stark numbers there. So George, do you have any questions that have come to mind for Celestine?
Yes, Celestine, thank you for taking the time to walk us through your experience and what is happening in the world of startup grind at the moment in Kenya. What we here in essentially the Midwestern part of the US, the Great Lakes area, forget is that our understanding of infrastructure is biased. We benefit from the beginning of 5G, and we forget that there is parts of the world where 3G is not ubiquitous. What we also see as we go through the globe and we talk to directors like you, we see that the challenges start with infrastructure and then they migrate to products, people, and processes. Congratulations on your work. That is really, really very positive, if you allow me to say, from our perspective, but also from the perspective of women, because as Corey suggested, women entrepreneurs bring a different value to the perspective of wealth creation. And I think this is admirable. Let me start by asking you, how strong is the infrastructure and what do you expect in the next few years in terms of infrastructure build-up in Kenya?
Thank you very much for the kind words that you've given me. But we as women, we have realized that sometimes we have to step up and walk our talk. So sometimes you have to be the one who goes out of your way to be able to let other women understand, number one, the opportunities that are available to them, for them to kind of like harness, and what steps it takes for them to be able to harness these opportunities. The second thing that that you talked about is infrastructure, which is actually very vital. Currently in Kenya, I think in Nairobi we have 4G, which we take for granted, because when you step just out of Nairobi, even within the same Nairobi in the outskirts, like in Kajiado, you get to realize that there is no more 4G anymore. it's 3G and 2G. So with different regions or just a few meters away from the city, you get to realize that the data that you the type of connectivity that you're getting is very different from if you are in the heart of the city. So the government has played its part very strongly in terms of encouraging connectivity, which I can kind of laud them. Sometimes when in Kenya, we take it for granted that the government is good internet that we have at the moment is everywhere. And it just takes, it just takes you to realize the much that the government is doing, especially when you're kind of criticizing them, when you compare them with the West, to go to the neighboring country and realize actually you're having a very good time in Kenya, in Nairobi, where you have access to data and good internet, at least affordable also. So I wouldn't complain about the government. I think it's taking a lot of strides, and we can see also when COVID just happened that first week, they at least were in talks with Google in terms of the Loon project. So they accepted at least the Loon project, which is internet through balloons, to be connected across rural Kenya, which will also improve the connectivity levels. And also within this whole time, we've seen that Facebook is bringing some fiber or wider internet across the African region, which will improve the connectivity that we currently have. So if the government also takes upon it to support that, it means that it's a win-win situation. So in terms of connectivity, I've seen that government has realized, especially with COVID, that it is necessary for us to have good internet and also good infrastructure in terms of electricity. Before COVID, not many people were online. Our service provider, which is Safaricom, was deemed to be the fastest and the best. But COVID has kind of made people realize that it also has downtime, or it also has issues when it comes to connectivity from time to time. And this is because of most people, a lot of people going online at once, which had never been expected or had not been planned or put in projection. So things that happened with this pandemic, I think, have made, whether it's a service provider, whether it's the government in terms of policy and infrastructure, to kind of start looking at what is the low-hanging fruit in terms of providing the opportunities for businesses to be continuous, to be able to operate, so that they be able also to pay their tax. Because it's reached a situation whereby everything has grown to a halt. And because there is no support of even people who earn a daily wage to kind of say, I'm drawing this money from the government, it's become very difficult for the government to even find out where do I put my resources? Which are the most important areas for me to put my resources? One of the areas that they've seen that is really crucial is the businesses, which are the startups and the SMEs, and especially startups that are tech startups. And platforms, I think, like Startup Grind, Google Business Groups, and also the Facebook programs like Boost have really encouraged people to understand how to leverage on the internet as an infrastructure to be able to be seen, visibility, and also to reach more people in a wider area.
Thank you. You have really touched on a number of issues here, and your answer was very comprehensive. Thank you for highlighting the Loon concept and the efforts that Google, Facebook, and others are making. As you probably saw in the news, Elon Musk is taking the satellites or satellite infrastructure on the net on the skies. The efforts are accelerating, and soon we should be able to communicate with a far better degree of fidelity and consistency in the signal. I should also mention that we are 7 time zones away. So what, about 8:45 there in the evening, your time? Here in the US, that would have been peak time, and you're doing very well. We have not had a single hiccup.
Yeah.
That's great. Great. My last question is this. Let's assume you mentioned Trigger and that they raised money. Let's assume you are now, you created your startup and you're ready to raise your first capital. Where would you go? Would you go to angel investors? Would you go to friends and family? Would you go to a small local bank, a large bank? Would you go to a successful entrepreneur? Would you look to a private equity group, the International Finance Corporation of the World Bank? Where would you go?
At the moment, if I happened to have a startup that I did a proof of concept or a pilot, my first point would be friends and family, which is the case here in Africa. So angel investors, it's very few and very fine between. So it takes a lot of and advice from people who've been there and also gotten some funding. They've said that sometimes they wrote like they approached 100 angel investors to just be able to get that person who believed in them and invested in them. So the advice would be, go to friends and family who believe in what you're doing. Start validating, have a product that at least is monetizing, even if it's you're not making much as yet, but you're making enough to stay afloat. So that by the time you're crunching the numbers with the angel investor or the financer that you decided to approach, you already have valid data or valid information to be able to feed to the angel investor, and he'll see the need of probably giving you money or investing in your startup.
Would you expect the Kenyan diaspora to contribute? I mean, do you see an active exchange of ideas and innovation between Kenya and the diaspora?
Yes, there are a lot of platforms at the moment where the diasporans have realized that the best way they can also bring this progress is bringing what they've learned out there and coming and using the same formula with the local startups or the local businesses. So a platform like Bomalink is a platform that is looking at bringing that top talent and funding also diasporans who have capital to kind of like say, I want to invest in a project or a startup or a tender in Africa. And I'm coming through a platform that's already well known and it's already credible. And it's got presence across Africa, not just in one country. Because what diasporans have realized is that sometimes I'm Kenyan and I see where I want to put my money probably, or in a startup that's based out of Nigeria, because that's where I'm seeing the restructure or the numbers are there, or a startup that's based out of South Africa. So Bomalink at least connects it connects the diasporans with some of the startups that are already in Africa, and I think they already started a conversation with Startup Grind to see how we can kind of like partner and push this conversation further.
Last question on my part, and I'll pass it on to Corey. Successful entrepreneurs, do they spawn new investments in startups? Do you see this kind of mentorship from successful entrepreneurs taking place?
Successful entrepreneurs, they give their time, especially in good platforms that they can associate with. I've seen a lot of successful entrepreneurs, especially when you're looking at chapters that have been established for a long time, like Startup Grind Lagos, where successful entrepreneurs come in and they give their hour or their time to talk to other startups and connect with them and guide them in the steps that enable them to be where they are. And the great thing about COVID right now is we can at least tap into different now chapters, because most of the workshops are online, or meetings are online, and we can learn and access. So it's not a matter of like how it was before, where you have to be in the same town to be able to attend an entrepreneur from whatever region, to be able to get the knowledge that would help you thrust you to the next step. So it's just, I believe, how you look at it and how you seek the knowledge and how you also approach the whole concept of technology aiding you to access very different perspectives.
Wonderful. Thank you. Thank you very much.
Yeah. So you mentioned a little earlier about partnerships, and we just spoke about the Lagos, and they're like the Silicon Valley of Africa, basically over there in Nigeria.
Yeah.
Now you we spoke before the program about partnerships just across like our neighbors' borders. And can you speak about like that kind of group effort? Is there such a thing? Are there networks that are coming together to help each other out?
Yes, there are networks coming in to kind of like see ways of collaborating and ways of working together. Because what most people have realized is that you need networks right now to be able to move to the next step and also see a different perspective from where you are. It's just like the African saying, where when there is a dance probably in the village square, you don't look at it from one angle. You have to look at it from all angles to be able to appreciate how the dance went. So those words are becoming very valid, especially for very many startups or very many organizations, networks, and just ways of collaborating. If I'm an e-commerce startup, I don't have to have an in-house probably logistic delivery system. I can collaborate with a startup that's already existing that I know that they deliver. That way, it's a win-win situation. So I focus in in my strengths, and they focus also on their strengths, and we collaboratively work together to go to the next step. So I've realized that people have understood the importance of partnerships and networking. When you're looking also at look at food, because food is what keeps everyone going. And if there's no food, people kind of like get freaked out. Most of the essential services that were allowed to come into Nairobi when Nairobi was locked down are food. So there was a lot of conversations going out on online platforms, just asking, how do we get our food from in bulk from outside into the city? And there was a lot of collaboration when it came to that, because people have to eat, and sometimes the food is in the farm. How do we know that this food that's leaving the farm has to be consumed in the city, and there has to be a ready-made order? So I've seen a lot of collaborations, especially between communities and between businesses and startups. And that is what also enabled Twiga to kind of like revise and look at their model, because their first model was to supply the women SMEs in the city, the ones with the small shops or kiosks, food to be able to sell to their immediate communities. When those shops were closed because of the lockdown, they had to be innovative on how to get to the consumer, because food is something that the farmer has to sell, and the consumer also has to consume. So they partnered with an e-commerce platform to provide that food to the consumer. But we have no idea how long that partnership will last. What would be the nature of that relationship post-COVID, or when things kind of like normalize as they're supposed to normalize? So that's a model that also the shop owners also have to think, because they know their clientele, they know their customer, and that has enabled startups to kind of like start thinking broadly in terms of data. I need to be online, and I need a platform that gathers data for my that relates to my community and relates to my networks. So it goes both ways. So technology has kind of like been looked at as an enabler for these partnerships to happen, and also to kind of like validate as a startup what partnerships you're supposed to form. If you're a member of Startup Grind, for example, and you're introducing probably someone who has a business in a chapter to another town, they will be accepted more easily because number one, they've passed that stamp of approval or authentication from the Startup Grind director or the Startup Grind, but the community is on its own. So they validated that this business, we know them, or this startup, we know them, and we are endorsing them for you to even start a conversation with them.
That's incredible. That's really great. Thank you so much. We have one last thing that I like to ask all the directors before we let you go back to your evening.
Okay.
Now, as the mayor of entrepreneurism and startups in your region, you mentioned before we started recording that you do have a lot of conversations with founders and entrepreneurs. What are some of the more popular kind of the questions that you're being asked right now as people are working on pivoting, looking at how much cash they have, whether they can survive at all?
Most of the people are just looking at ways in which they can sustain probably their workforce, because sometimes as startups you realize like you've built a team that you now can't sustain. So you have to kind of like think of innovative ways that will enable you to just enable that team to be sustainable. So most of the founders or most of the startups are basically looking at ways of pivoting of multiple income streams that allow them to stay afloat while they are still searching for what the direction that would be concrete in terms when the stability that is yet to come happens, and what would enable them to just be sustainable to keep their workforce in place where they can earn and at least eat and feed their families. So that's very crucial for most of the founders. So looking for avenues within their networks or within the products or services that they were previously offering that will enable them to just stay afloat. And that involves also looking for partnerships of whom they can kind of like collaborate or work together in terms of implementing the product or the service that they are pivoting towards for that sustainability.
Well, thank you very much. It is interesting as we move around the world to see what people are thinking and doing in the very moments that we're asking. George, any final thoughts before we let her get back to her evening?
No, it is just extraordinary that Celestine mentioned the human capital considerations, the processes involved in identifying the best ways to approach the customer. And the third point is the strategic partnerships. I think this crisis has had the silver lining.
Yeah, it had quite a silver lining in startups also starting to think more about the communities they impact rather than the profit margins. So it's no longer about the hotcake, what's selling fast. It's a matter of what's the community benefiting from the service or the product that I'm offering at this time, and is it sustainable?
Right. Well, we're absolutely honored to have you with us this last hour. Really so grateful to make your acquaintance. Look forward to keeping in touch. What we are doing is we're sending out monthly sort of surveys, real quick surveys about sort of like how have things been going type of thing. So excited to keep talking with you. Great to know you. Thank you so much.
And thank you so much for inviting me. And I've learned a lot also. And I've connected also, made my network bigger.
Exactly.
Thank you for your time, Celestine. Thank you for the presentation.
Okay.
It was
Bye,
wonderful.
George. Thank you so much. Really appreciate it.
And with that, feel free to join us every Monday, Wednesday, Friday live. If you like, you can RSVP at startupgrind.com/grand-rapids. And we'll let Celestine get back to her evening. And thank you again.
Okay, bye.
Have a good evening.
You too.